It would be, I suspect, a bit of a reversal in tastes if apartments were to fall foul of investors, because that's been the big growth area, hasn't it?
Yeah, it has, but we need to put this into perspective. What we've surveyed is some experienced investors. So these 1,000 respondents, just to give you an idea, 9 out of 10 of them actually already own one investment property, and actually half of them own between 2 and 4 investment properties.
Right.
So we're actually talking to a pretty sophisticated group of people. These guys aren't amateurs, so they know what they want and they have a good amount of knowledge in terms of what they do. So when we talk about their appetite for apartments, I suspect they do have an appetite, but it's probably waning compared to existing houses where we're starting to see more focus, because at the end of the day, that's where the returns are coming at the moment.
Returns are coming, what, from actual houses, dwellings, as opposed to apartments?
Yeah, I think everyone tends to think that these off-the-plan and new apartments is where everyone invests, but it's not necessarily the case. And that's not to say that they're a bad investment, but I think people are starting to see the headwinds. We do know that, there's more data coming out around the supply story, and we're definitely going to see an oversupply of sort of high-rise and medium-density apartments around the Brisbane and Melbourne, and to a lesser extent the Sydney market. So I think people are just being more informed, and certainly the ones that we've surveyed in this particular sentiment survey are telling us that this is not a market that they want to be playing in the short to medium term.
Are there characteristics of apartments in general that they are wary of?
I think what they're wary of is the supply side. So, ultimately it's still a demand and supply story. So if we did see a lot of strong demand, then we're going to see price growth. But if we actually see softening demand but a supply coming online, and this is the problem with when we see, this construction-led recovery that we've got at the moment, we're seeing record numbers of apartments coming online and record approvals coming through. So there is a bit of confidence in this market, but these sophisticated investors are probably telling us that they don't want to have as much exposure in this particular type of asset as opposed to, say, an existing property closer into the city where there's a lot more scarcity.
And what 1 to 2 bedroom apartments, it looks like as well, are those ones that they're looking to avoid?
Yeah, I think that's obviously where the majority of the asset base is, and I think you're right in saying that. So when you actually look at the composition of people who want to move into any type of dwelling, 3 and 4 bedroom houses are in shorter supply, yet families, say a family of 4 people can't necessarily comfortably live in a 1 or a 2 bedroom apartment. So, we've also got to understand that investing in property is still driven by owner-occupier appeal. I mean, at the end of the day, 70% of the marketplace is controlled by owner-occupiers. So the smart investor focuses in on what they're looking for, because that's where the demand lives. And ultimately, they buy with their heart, not necessarily their heads. So with low interest rates and a shortage of supply, because there has been a real shortage of listings through this winter period, and we're starting to see even this early spring period, we're seeing less listings in the Sydney and Melbourne markets, and that's causing this, what we call FOMO, fear of missing out. So obviously the investor is competing against the owner-occupier, low interest rates giving people confidence, and they're pushing values higher in this particular existing housing market, and also some of the older units and villas and townhouses as well.
Did you get much of a sense as to preferences amongst the people you surveyed in regards to capital cities in 4 markets? Do they have any preferences?
Yeah, we did. Brisbane is still showing the biggest sign of interest. So 50% of those surveyed, of the 1,000 surveyed, are basically saying that they think that Brisbane is the next market in the cycle. So they're thinking that the Sydney market has probably peaked out at the top of its cycle. That's not saying that there's still opportunities in the Sydney market. Melbourne's probably getting close, and we're seeing Melbourne market very hot in regards to auction clearance rates. But we are starting to see people look at Brisbane as an alternative for 2 reasons. The affordability story. So in terms of houses, they still look very affordable compared to Melbourne and Sydney, and also the yield story is still a good one. So we're still seeing yields in excess of 4.5% in the Brisbane market, and you're not seeing those, in the Melbourne market, you're probably seeing yields around that sort of 3.25%, Sydney around 3.5%. So I think if there is the argument, they're sort of saying Brisbane's probably giving them more opportunity, and that's a cause of the actual Brisbane market being a little bit sluggish, the economy a little bit softer. So I think these investors are saying, well, if I get in now, I'm not going to be competing against the, those FOMO buyers who are fear of missing out.
Really interested to see some of the reasoning behind the investing that from the people you surveyed. In particular, the fact that negative gearing only a 2% motivator.
Yeah, I think again, you know, there's been so much spoken about in the whole negative gearing debate. I mean, at the end of the day, negative gearing is just a moment in time. You know, it's basically the cash flow at that moment in time. Am I positively geared or am I negatively geared? Now, what was interesting in our survey is almost 50% of those surveyed have passive income already generating from their property portfolio. So they're actually paying tax to the government. They're paying their way. And so we've seen a lot of debate around, you know, negative gearing being the reason behind affordability, you know, saying that these speculators are coming into the property market and forcing values higher. This is basically telling the Labor Party and the Greens that this isn't the case. These investors are still going to be long-term investors, and they're going to remain true to their long-term plans of building up capital growth and getting a passive income over time. And then they'll pay their taxes then. So, you know, it's a really interesting story for both the Labor and the Greens to sort of see whether they still want to push this whole negative gearing debate.